It's certainly been a great year thus far for the Carvana bag holders. If we go to the monthly chart, we can see price from the December lows are up roughly, wow, 1,000%. And last week alone, the stock was up roughly 25%. Why? Well, two things. Obviously, price pulled back to this daily buyers level at $36, where it found bidders and bid up price roughly $13. But there was also some great news in Carvana's favor last week. Let's get into the news. So last week was a relatively positive one as the company completed its debt exchange, and that's what kind of started the catalyst from early this year. They were going to renegotiate their debt at a lower rate. And the state of Illinois passed a law favorable to online used car sellers. And also the company's founder and CEO bought a large amount of stock in the open market. So whenever you see insiders buying shares in their stock at market value, they think that the stock is undervalued and or going much higher over the longer term. All right, so a family trust controlled by CEO Ernest Garcia and his father, who is also a large shareholder, bought $116 million worth of stock on August 18th at an average price of $37. The sizable purchase no doubt fueled both optimism and a bit of a short squeeze to start the week. Carvana was able to exchange some of its outstanding debt for new notes, which will lower the company's interest expenses and push out bond maturities in exchange for greater asset security for the company's bond holders. While it was announced early this summer, the debt exchange actually just closed on Thursday, with 96% of its note holders participating. That may have added further optimism to Carvana's recovery story. And this was the catalyst really for the stock moving higher off the lows early this year. Also, both houses of the Illinois legislature unanimously passed a law that updated the state's previous outdated laws regulating used car dealers, finally allowing the state's residents to accept home delivery of used cars. And that's what Carvana's business model is all about, delivering you the car that you purchased. While it was inevitable that something like this would eventually pass, it was still an incremental positive for Carvana, the business model of which relies heavily on home delivery. However, Carvana is not out of the woods yet. While Carvana has pivoted to greater profitability, increasing its gross margin per car sold, and cutting expenses, units sold were still down by a huge amount year over year in the second quarter. So while the CEO purchase of shares is no doubt an incremental positive, Carvana remains quite a risky story. The company will still have to return to growth while holding expenses down and fending off competition, which has increased in recent years as rival car dealers have gotten much more digitally savvy than they were in the past. One thing for all companies, when you're comparing year-over-year quarters, it's really tough to beat those numbers. As a year ago, you probably reached the peak from the pandemic highs, and where Fed stopped giving out helicopter money from the skies. So just to note, your comps compared to a year ago is tough to beat. All right, so just out of curiosity, the CEO bought on August 18th at 37. Yeah, he must have been watching the video, and previous video I did on Carvana. Or he might have been the guy who caused this up leg. Who knows? Nevertheless, I'm going to scroll out to the weekly chart. And you can see that price is still in an uptrend. However, it did lose a little bit of steam. But this is natural in an uptrend, right? You have the impulse move, pull back, potentially for the impulse move. But what caused the impulse move here was we had a daily sellers level at $37, right? Let's zoom in so we can see that. So you got two levels on level. You have a drop, basing candles, and a drop, basing candles, and a drop. When price pulled back in August, it did penetrate the zone more than 50%, which meant that this zone was used up. However, it did work a second time. Now, I don't anticipate it working again. I do anticipate price moving higher to the second daily sellers level where there are unfilled sell orders. I'm going to say this level has been used up, meaning there are no more unfilled sell orders, and I do anticipate price moving higher to the next level of liquidity. It's kind of nice how when things work out in your favor, you had to pull back into, see this gap here that caused the imbalance between buyers and sellers. Price pulls back. It actually worked twice, right? Had to pull back here and then another pullback where price had to go lower to find those unfilled buy orders before price moved up higher. So, Carvana was a pandemic darling, which crashed for multiple reasons. They bought cars at the peak. They took on a lot of debt just as interest rates were rising. But it could also be a turnaround story if you believe in the business model longer term. Thanks for watching. Subscribe. Please like the video.